Hey, good morning, everybody. Let's go ahead and get started with this week's BMA broad market analysis. We'll be going through a couple charts, looking at earnings, see who's reporting, looking at market watch, and then just overall give you my sentiment for the week. So we will be covering tonight, the 26th of March, into the 31st of March, and also just so you know, we will be closing out our quarterly candles this week on Friday. So very exciting, and we'll talk about that here shortly. All right, let's get started with the earning whispers. I find this on Twitter. It's free information. It's who I've always used. And you can take a look here and see some of your favorite names perhaps are reporting this week. So just please take note of that if you're in positions that anything can happen over earnings. When I'm looking at this, I'm kind of interested in CCL or Carnival, and then moving on into Tuesday, Futu, because I'm looking at a yearly chart and this thing looks pretty primed to move to the upside. So I'm just interested in see what happens. Lululemon, I feel like during these times that it's a little expensive, a little ahead of itself, if you will. Micron, definitely want to see what happens there. Dave and Buster's, not a big fan, don't really care. Moving on into Wednesday, RH, still feel like that's really expensive. And moving down here, let me see if there's anything else that I feel is relevant, or any names that I really like. I don't really see anything else, so let's go ahead and move on to our next thing, and that is Market Watch. So Market Watch, we want to take note of any names that might be in here that could cause some volatility in the market, and a lot of these things do. So let's just kind of go through this really quick. So 5 o'clock, which is going to be Eastern time, so after the market close, Fed Governor Jefferson speaks. So if you know who that is and you think that might disturb something after hours, then just take note of that, please. On Tuesday, we have advanced retail inventories, and you guys can see here, pending U.S. homes on Wednesday, Thursday, GDP, initial jobless claims, and then on Friday, we have a pretty busy schedule as well. Let's go ahead and take a look at that. Personal income, personal spending, PCE, core PCE. There's a lot going on, so I feel like it's going to be a little choppy this week from what I'm seeing, just relating to this, this calendar itself for Market Watch. Okay. SPY and QQQ, neutral strategy. Let's go ahead and get into that. So I send these out every week. If you want to learn how to trade this specific neutral strategy, it is on my YouTube page at Trendy Trading. You can check it out there. And basically, we just look to go long above the green and look to go short below the red. But again, listen to my overall sentiment, okay? And then we trim and pull stops up into targets. You can see here on the SPY, we did hit T1 and T2. We did break down first and pull down into the T1 section. We didn't quite hit T2. And over here on QQQ, you can see that our lower levels did hold. So again, lower levels are support, upper levels are resistance. And you can see here, once we broke above the Qs, which are kind of leading the market here, we did hit T1, T2, and then T3, and those being resistance, as you can see. But overall, stayed above the 307.25 level into the end of the week. Moving on, let's go ahead and go over the SPY and QQQ neutral strategy for this week. So the only thing, I don't need to really talk about this with you, but I want you to take note of the targets themselves, to the upside and targets to the downside. My overall sentiment, it looks bullish. All right, so when we go into the quarterly chart here in a few minutes, the markets do look bullish. A couple things I'll just make note of while we're sitting here looking at this is we have the SPY on the left-hand side and we have the Qs on the right-hand side, okay? Now, the SPY itself, we are making higher lows, okay? But we are making lower highs. So for right now, folks, this is a sideways trend, and you can see that. So expect more chop. In order for the SPY to really disturb, I guess, bears, we would have to take out this dotted line up here around 402. Then if we were to do that, I'd be looking for price to push up into supply around 406 to 408. All right, but these are resistance again until proven otherwise. I do believe there's quite a bit of supply up here, so be careful if you're going long. Just follow the plan, right? Take those profits. We're just really paying attention to being good stewards of our money and just hitting those base hits, okay? To the downside, you can see we have a little bit of support down here. I went ahead and annotated those levels 392, 390. This dotted line here, this is the range. Basically, the structure that I'm looking at is right here. So this box, and I do believe we kind of just trade within those boundaries. The higher we get on the curve, if you were to look at this as being top of the curve up here, I would be careful. As we get and approach those 402 levels. And if for some reason we get to pull back into the 393.89, I'm looking to buy that dip. Over here on the Qs, same thing. The dotted lines, folks, is the structure that I'm looking at. And as long as price stays in there, I think we just trade the high end of the curve and the low end of the curve. So if prices push and get close to here, I think this is a better opportunity to look for a short. And again, that could just be short time frame, meaning it only lasts for a couple minutes. Again, we assess when price gets there. When price does move down, or if it moves down into the lower end of the curve, this is where I'll be looking to get long. So around that somewhere around 308 to 306, possibly 305, I'll be looking to go long there. And there are tools that help me get long there, and I love to use the TTM squeeze. I have the TTM squeeze pro here, and I talk about that. So basically, if we get to the levels to the downside, I'm going over to a smaller time frame. What I'm looking for on the TTM squeeze is the histogram, so the color of the bars. What I like to see when price is falling, that these on a smaller time frame, so about anywhere from literally a 1 minute to 5 minute, I'm looking for bars to go red. And then when we get to the specific levels to the downside, I want to see two yellow bars, and that gives me the confidence to go ahead and start my long on that smaller time frame. Okay. Now to the upside, as we're hitting into resistance, again, you can use your histogram. Look for those dark blue levels to kind of give you an indication that the buying pressure is easing off into those upper levels. Okay. All right, so the next thing that I want you to do is pay attention to the bigger picture as always. So the bigger picture, I've been using a quarterly candle for quite some time. This is really helping me in 2023. And these are some notes that I just want to talk about. We only have 5 days and 8 hours until this candle closes out. So far, I believe that the bulls are holding above the cloud and the bull channel. So far, price is only up though about $10 to $12 from where it closed last quarter. So really the market hasn't done a whole lot. And if you pay attention here and just take a look, you could see, okay, you could see here that it's hard for me to believe that we are in a bear market, as a lot of people have been saying. You could just throw some Fibonacci's on here and you can see that the value is holding above the cloud. We're holding above the 38% Fibonacci level. For me, that means bullish. So the one thing I'm concentrating on is whether or not the quarterly candle can close above 390.25 on Friday. And so that's basically the biggest thing that I'm looking for. If for some reason we close underneath the candle, then I think that we could into the next quarter maybe pull back a tad. Okay. All right, moving on. Let's go ahead and take a look at the QQQ. Now, this one is really impressive. It's moved quite a bit. The quarterly candle, 5 days, 8 hours to go before the close. A move above 321 actually puts tech or Qs back in the bull channel for 2023. All I'm saying is from the 2020 level, so right here into the pivot high, that price has moved back above 38% of that value area. And if it does indeed get above there, it is very bullish for me. Okay. Now, again, that's the methodology that I teach. So far, bulls are giving it a good go. Support is 38.2 of the current candle. So if you were to measure this current quarterly candle, as long as price can hold above 38.2%, it stays bullish. As long as price can stay above that cloud, it stays bullish. Going into the dollar, folks, we've been using this chart for so long now. It's just absolutely amazing how well it's worked, how well we've coached around it, and you can see the significance between the dollar and the market. When the dollar's pulling back, basically, we were looking for the rest of the market to push up. It's done everything that we've talked about. Let's just talk about it. Months ago, we annotated that we had a topping wick, so we were looking for the dollar to come in. It went inside, then it went inside and down. We were expecting the dollar to fall into this demand zone right here. It did indeed do that. We had a nice January. The market moved up and then we just got really choppy, right? We came into this demand zone. We expected the dollar to move up. It did indeed move up, but it could not get over the bear channel of the 38.2. This 38.2 is still very, very important. As long as the dollar stays below this red and green line, I do believe that the market continues to march up. I do believe that you should have caution if you see the dollar move back above $1.05. Okay, those are my notes for the DXY. Let's go ahead and look at the TNX or the Treasury. I honestly don't have a whole lot to say here. We've been using this chart for many, many, many months. And as I said before, a lot of people keep talking about a crash and capitulation. I just don't believe that happens unless we get above that 4.5. And I've been saying that for almost a year now. This resistance level as well that we've been using has been working quite well. And just know that it is close to support. So the TNX or the Treasury could rise going into the end part of this week or even into April. But just know it's getting close to support. But also resistance is right there. So I expect it to kind of just calm down, if you will, right? Going into the skew, not a whole lot to talk about here. I did change up this level right here. Protect risk off. We're not quite there. I think we're basically in this area where we could see the market move up for a little bit. And I really, for me, once we start getting above 135, I think you start to see a little bit more caution. You'll start to see that the markets are moving into supply zones and so forth. Okay, so a little bit of room to wiggle in here. Okay. Let's go ahead and look at the fear and greed. Fear and greed index is 33. What does this mean to me? Well, it makes sense. The market, it's volatile. People are scared. I think a lot of people are on the sidelines. It's not been an easy market for most traders, and I don't think that it's going to get easy. I think that you have to learn how to trade the extreme uh, levels of supply and demand, if you will. But I'm here to identify those for you and show you that proof of concept that it can be a lot more consistent when you apply this type of technique to your charts. Okay. So again, always be here first thing in the morning so we could talk about what I'm expecting for the day. We can identify those zones together and just kind of go over those together. Now, the majority of participants are on the put side. So when the market is fearful, people are, either sitting in cash or they're buying puts. And a lot of times when a lot of traders kind of jump on one side, that's when the market has that extreme move. So again, how do we catch people off guard? We rip the market when they're in puts. And how do we catch, traders when they are in a state of euphoria? We drop the market, right? And so the needle, if you will, is, hanging out here where we could see a move up in the market. All right. Now, one more thing. All right, I think this is important. Let's go ahead and go over here to the futures. This is my Twitter handle. If you guys don't follow me, you can follow me at TrendyJon, TR3NDYJON. And I put out some charts and stuff here. And if you guys get over there, give me a like, if you will, and please give a little bit of support in there. And if you have any questions, you can always just ask here in the comments. Let's go over here into Discord. Remember, guys, the alerts are coming through here. You can see everything that I trade straight from my API, and it gets sent to you immediately. Let's go ahead and minimize that and get over here to the ES futures. So you all know, so the ES futures are my guide. This is how I like to trade my portfolio. And it gets a little bit more, I guess, detailed than this, but I need you to understand. When price comes down into green or demand, I'm looking to be long in my portfolio. When prices get close to resistance, we're looking at bringing stops up. If you're still wanting to start longer term trades, we're just starting or scaling in because we really don't know what's going to happen here. Does price resist here and take out the lows and take out these stops down here where people did get long and then come all the way back to prior demand around 37.15? Or do we just kind of consolidate here and break through and finally make it up here towards the top of supply, which is around 41.37? So if I were using the ES futures, which I do, this area right here on the smaller time frames, I'm seeing some bullish action. I'm seeing, that the market is primarily fearful. I see signs that we could continue to move up here. The thing about it is the journey is not fun for a lot of traders, especially if you are, just concentrating on every little tick. And if you can't get away from the screens, I just want to remind you there's life outside of the screens. There's a lot that you could do, to increase and feel better for yourself, and there are things that we can do. We can put on trades, we can have targets, we can place our stops and still live our lives, okay? And I'm finding, that it's more peaceful, right? It's more peaceful to just trust your charts. Look for the moves into your targets. Place your stops. There's only two things that can happen, folks. We either get stopped out and lose money, or we hit our targets. Okay. So moving on, we're at that area of resistance. Overall, I do feel on this inside and up formation that we could continue to push up here towards the top of the cloud, or around 40.87 into 41.37. But again, this support really needs to hold. All right. This is the blueprint for the week going into the daily. You can see here I have two new trigger longs. Basically, what I'm saying is if price comes back to there, I'm looking for support. Now, depending on the trajectory on a smaller time frame of how fast it gets down there, kind of depends on if I take the trade or how long I stay in the trade. Think about this, okay? If this is my guide and price pulls back into here, then I'm looking to add into those areas that I'm scaling into long term, okay? So that's what I'm looking at. What I'd like to see here is, again, higher lows on the yellow histogram bars, and then start to see, these starting to fire to the upside, or see that nice, beautiful blue right here. I always like to see that to get some confirmation that will continue to move up. The daily looks great. It's a inside candle. It's starting to go inside and up, but it's not quite, this is not like something like this I would feel a lot better about. Look for that. And then in the future, if price were to come back, we would also buy right there. So this is a anticipation. We're forecasting inside and up, continued moves, but you got to understand, you have stops right above here, you have stops below here, and so we can get a lot of manipulation this week, and just kind of stop people out on both sides. And that's why I'm telling you, concentrate on the structure that we're seeing. And that right there, folks, is your structure. You got stops under here, you got stops above here. Anything above there, be careful. Anything below here, be careful, because I think it's just manipulation, and you just kind of find yourself right here in the zone. Okay, so again, we have to identify those extreme levels on smaller time frames to be able to get in and out very quickly. Okay, I'd say very quickly. It could be 1 to 3 days, it could be a day, it could be 10 minutes. It just kind of depends. All right, moving over here to the 4 hour. I gave you guys a chart on Friday. Absolutely killed it. Stunning. Works very, very well. And I always tell you, my charts speak for themselves, okay? And then obviously my alerts are patched into my API. Let those be a proof of concept. I do what I say, I trade what I say. You get to see the results, whether I make money or I lose money. Okay. Now, something a little bit different here on these zones that I wanted to do this week, and kind of just educate you to let you know that things are, you know, they're not always easy. So these are supply and demand zones by using formation. I teach you how to identify those. But what I did is that I put a Fibonacci in here, or a measuring tool, if you will, because these aren't necessarily Fibonacci levels. And I measured the zones. Okay, so the structure itself right here is the inside and down formation. And then I went ahead and used a 25, a 50, and a 75, because we know that not all zones are created equal. We can't tell you whether or not it's going to work to the tick, or if it's going to dig in a little bit deeper. And I think that's where you can really get beat up. Okay, so the aggressive approach is to say, hey, it hit my level, I'm going short, and my stop would have to be behind this box. And you could see the difference between 4,011 and 38. That's a really wide zone. Okay, and not a lot of people like to trade futures like that. You may be okay with trading options with that kind of risk, but for me, if it starts to dig in, one thing that I've learned is that you don't want to be the trader. It's like, oh, well, the market's going up, so I just want to short it. Or, hey, the market's overbought, so it's time to short it. Like, that's not a good way to trade, in my opinion, because the market doesn't care what you think. It can continue up, and I feel that these levels are going to help you. And I do believe that these could be turning points within here. So, for example, if price were to pull up into the 25 and then start to reject, what I could do is place my stop right above that 25% and then look for it to break back down and revert back to the mean there around this cloud. Okay. So, again, these are just areas within a zone where we could see rejection. And these are areas in a zone if for some reason it doesn't, let's just say it comes all the way back down and it doesn't move on a touch and go, so it touches and goes, but it just keeps on digging in, then what we want to do is then, apply these levels where we could see a move to the upside. Okay. All right. So, anyways, that's what that is. These are your two opposing zones. We did close at the 4 hour zone. Technically speaking, we would see just a bit of a push here on tonight's open and then perhaps a failure. Any kind of catalyst out there I'm not aware of. Again, I don't listen to news. I don't watch news. If there's something that's positive and we push up into this supply zone, then I would be looking for 4,011 to hold. If it doesn't, then I'd be getting short and trying to short into those lower time frames that we'll go over right here. Now, this is the hourly chart. I used a 30-minute, I used a 20-minute, and I came up with these zones, but you could see these really clearly. This is your 1 hour as well. This is an inside and down formation. This is a supply zone. I would expect some resistance around here. So if we gap up tonight and we do gap up, say 8 to 10 points or so, then just be careful right around this area. Be looking on the smaller time frame down here to see any clues on your 1 to 5 minute chart. But for right now, it actually looks really bullish. You can see on my indicators themselves, they've went from red to white to green. So the momentum is changing. The EMAs are starting to cross. This is a bullish sign. So again, we could see that nice slight gap up. But again, just be cautious if you're in the red zone. Same thing here, just smaller time frame. I want to be, if I'm long, I want to be careful, as I said in here. If for some reason we come back here, I want to be looking to get long as long as the histogram down here starts to line up. Pretty much that's it, folks. My overall sentiment, I am bullish. I want to continue to buy the dips, but I want to buy them at demand zones. If you have any questions, please reach out to me. I really appreciate you guys. Don't forget to follow me on YouTube and give these videos a like if you have some spare time. And don't forget to follow me over there on Twitter. You guys have a great day. We'll see you soon.